Welcome viewers to those that are new in the channel. Welcome also. You can click and subscribe on the channel if you love the content or if you've loved the content also before. So today we are going to talk about various things in the markets, especially today. I think it was around 10 a.m. to 12 p.m. We had the European Central Bank had its meeting, had an emergency meeting. It wasn't planned because of the bonds market, and that had a bit of some effect. As you can see, the bond market came down drastically after that news, and it dropped up to negative 3.26%. So let's get to the story and understand what really happened. So the European Central Bank ECB is to hold an unscheduled meeting on Wednesday amid growing fears that turmoil in bond markets is causing big increases in the cost of government borrowing. Those are one of the things that's definitely happening in the markets. The bond yields which indicate the price that government must pay investors to borrow money have risen sharply amid fears for the outlook of European economies. Rising borrowing costs have also come as central banks hike interest rates to contain a surge in living costs. Higher debt interest repayments could hamper government's ability to provide financial help to households and business struggling with massive increases to fuel and energy costs. The Governing Council will have an ad hoc meeting on Wednesday to discuss current market conditions. Bond yields have risen sharply. We all know that since the ECB announced its plan for rate hikes last Thursday. The premium that some member states pay over the risk-free German 10-year bond has spread. Several Eurozone's nations are highly indebted, with debt piles equivalent to more than their entire annual economic output. So you're having the idea that things globally are not as it should, and that's what you're seeing with the debt piles equivalent to more than their entire annual economic output. The cost of COVID support program has added to debt built up after the financial crisis that has yet to pay it down. You can remember in 2020, the central banks were printing cash to caution people against COVID. They were giving out paychecks worth $1,000, $1,500 as relief funds, even to some families $3,500. And now the government is now coming back for its money. Inflation also coming back for its cash. So the Bank of England is widely expected to increase interest rates when its monetary policy committee meets on Thursday. This seems to be a big week within the stocks and the crypto market because you have seen three meetings that have happened. First of all, I've seen the ECB meeting. Today, also seeing the FOMC meeting. And now you're also going to see a meeting within the Bank of England where they're expected to increase interest rates when its monetary policy committee meets on Thursday. That will mean higher borrowing costs for homeowners on variable or tracker mortgages. In the US, experts have warned that a closely watched indicator is pointing towards a looming recession. So the rate at which recession can happen within the current market. By current market, I mean as of 15th June 2022 is on a 50-50% rate. 50-50, no one knows what will happen. So the yield curve, which plots the amount investors are willing to receive in exchange for lending money to governments, turned negative on Tuesday. It means that investors are pessimistic about the health of the economy. Same data that came out in the UK. It was shocking that people have less confidence within the UK market, that's it's the UK citizens, and the data came out and showed negative impact within the global economy and also within the UK economy. And that's why people are bashing out the Queen of England for using a gold chair to sit on while the economy is on the brink of collapse. Usually, long term government debt offers high yields than short term because investors are looking away their money for longer. People are now holding cash, they're not spending cash as they used before. However, when fears increase about a sharp downturn, they're willing to accept less for a treasury maturing many years in the future. So already you are having a discussion where the ECB are expected now to start controlling the yield bonds. Then also the governments have also decided to talk about quantitative tightening on Thursday, possibly I don't know if that will happen. And today we are having the idea of the Fed rates, and they're going to tell us what they'll do to the economic impact. So hours before a closely watched meeting of the US Federal Reserve, the Governing Council of the European Central Bank announced it will conduct an emergency meeting. This on a broader aspect after they simply had their meeting. Now, this is the news that came out later on. Italy's 10-year yield bond slid 22 basis points to 4% after an announcement. This was before, this is now. The European common currency rose to as high as $1.0508 following the announcement, which comes after the spread between government bond yields from Germany and more indebted southern nations, particularly Italy, soared to more than 2-year highs. This meeting started at 0900 GMT and is likely to be followed by an early afternoon statement. People with direct knowledge said we have a little bit of relief in euro this morning because of the ECB. They'll start now offloading those bonds. But except for that, it's the dollar that is firmly in control. The Federal Reserve policy meeting is due to conclude later on Wednesday, and markets are pricing in at 78% chance of an outsized 75 basis interest rate hike as policy makers try to rein in rampant inflation. We see tighter monetary policy in the Eurozone, but even tighter in the US, and that will be a key factor for the dollar against the euro. The strong euro meant the dollar index, which measures the greenback against major peers, peers including the single currency, fell at 0.5% to 104.77. The dollar had already begun gaining ground in the past few months thanks to the Fed raising rates ahead of most other major central banks, and has given another leg up in recent weeks as investors seek safe havens, fearing the economic impact of rapidly tightening financial conditions. It recovered in the course of the day amid volatility in government bond market to as much as 134.33. Sterling pound rebounded to as high as 1.2097 after slumping to a 15-month trough versus the dollar at $1.1934 the previous day. Now, we're also having the issue with Celsius withdrawal. If you never knew, Celsius have already added their margin, and at their current rate, their margin of liquidation is at $14,000 level. That's their margin trade. So Bitcoin will have to have the narrative of falling up to $14,000 level so that the Celsius margin trade can be liquidated. That's on an average of 35 to 40% drop with Bitcoin. Can that happen as of today? No one knows what's going to happen. No one knows what's going to happen. But look, in this narrative of the idea of 50, 75, 100 basis points, we have number one, 50 basis points. That will seem neutral. It will be quite sad for banks and also investors to see the idea of the Fed imposing a 50 basis point. People will be having the idea, how will that tame inflation? But on my aspect, if they're able to impose a 50 basis point, then they'll now start offloading their bonds and their mortgages from the markets. If the bonds are able to work within the either within using any tools like monetary policy and fiscal policy, then we'll be able to see also the basis point rates working in between QT and FED rates. But if that doesn't work, and they've discussed, they'll have to come aggressively. How will they come aggressively? They'll come aggressively by maybe going to 75 basis point, 100 basis point. At the same time, they're also offloading bonds. Those are two scenarios that can come out. But if it's 75 basis point, definitely we'll have a bit of a decline drop in the market, because we are now having this idea. People are saying that, hey, I think this is the bottom. Bitcoin has been oversold. I am buying. What happened to Luna? Luna continued crashing down with its oversold technical analysis, dropped from $100, 70, 50, 30, and it had 0.00. Why did it have the idea of 0.00? Luna did not go to zero. Luna had its minting applying in their ecosystem. That means more tokens were being minted in the Luna ecosystem, and that those zeros started generating, and those supplies, those tokens started generating a 0 decimal points in the price of Luna. And now we are having the narrative that Bitcoin is now at the bottom. We should now start buying. Why are you buying BTC and yet you're not assured if this is the bottom? Within yourself, you're seeing globally things are now at the peak. People are now feeling the idea of depression. Who shorted the market? Who longed the market? Now, why are you also not buying Bitcoin at this price? Because you normally have the idea of when people are in fear, you buy. Okay, be fearful when others are greedy, be greedy when others are fearful. That's always the narrative. But if you've been holding Bitcoin from $40,000 or $50,000 or $6,000, now you're paying the price of an exit liquidity that might take you a long time for you to recover your funds. Just for you to recover your funds. What if you buy Bitcoin at $21,000? What if you're able to see even an $8,000? What happens? Okay, you start having that idea of depression, thinking that Bitcoin is a scam. Why don't you just DCA, meaning dollar cost average within the prices? That's better off rather than buying an X amount of your capital, all of it. Just saying this is the last dip. We've been saying that the best support, Bitcoin has never broken its support level, its previous all-time high as a support level ever since 2008 to 2022. That's 14 years ago. But remember, the market dynamic always changes with time. This time might be different. If you're able to touch $8,000, are you on the narrative that, oh, Bitcoin has never touched its previous all-time high? It has never, but we've touched $15,000 or $14,000. What are you saying? Okay, that's when panic mode will come in, and we might drop even to $10,000 or even $9,000 as a retest. Okay, as a retest. So we are waiting for the Fed meeting to happen within 4 hours as from now. What will they say on the idea of the basis point? That's where everyone else wants to absorb the news. Now, if you look at Bitcoin and what is happening right now, first of all, let's look at it in a weekly time frame. I already shared this out, and I said we are having a nice support level of BTC at 19,876. We almost touched 19,876 at its previous all-time high for Bitcoin. Okay, we almost exactly touched that. If we looked our book heat map, what did I say? I said this large liquidity of the book heat map, or what it was, what around 600 to 900 BTC. I can't remember quite well, but those were the orders, buy limit orders, that were there at $20,000 to $20,500. And that's why we are having the idea that we are not dropping below this quite easily, because there's much liquidity to grab at $20,000. Now, we are going back to, let's check our 4-hour time frame of Bitcoin. Now, yourself as an individual, you've been shorting Bitcoin probably from 30K, and now it's at 21,644. Why are you not paying yourself before the FOMC meeting? Why? Okay. Now, it's pumped back down to 20,110 as of today when the ECB meeting came out, when the news came out, and now it has pumped 5% back. We are seeing the volatility right now in the market. Let's check out the SP 500. What's happening? We're also seeing the same idea. We are seeing a green candle just occurring within the SP 500, and you have seen an increase of 1.45%, 1.82%, 1.2%, and also the stocks are in green as of today. Also, gold has pumped today at 0.78 to 0.79. Does this show that now we are on a relief rally within cryptos, or has inflation peaked yet? Has the idea of recession and inflation been absorbed in the market for Bitcoin not to drop much further? Remember, it's just that they are now starting to offload the bonds. They'll start imposing quantitative tightening, and then the Fed will now see whether it's 75 basis point, 100 basis point, or 50 basis point. Has that been controlled yet in the market? No. It's just the beginning, before the end. So does that mean that this is the last price of Bitcoin to fall to 21,600? No. It simply means we might have absorbed the news of 75 basis point, recession, inflation, CPI data, we pump back up, maybe, then come back down. And I'm going to give on the circumstances that I think we might pump back up and we might pump back down. Let's go to the SP 500 and check this out. As of today in the open, we had an open from 37.64 to 37.94, just an increase of 1.4%. And now I'm going to 30-minute time frame. As you can see on the 30-minute time frame, we have been slightly just overbought slightly, but we are about to test the 50 EMA on our trades. And the 50 EMA is at 3,834. Will we arrive at 3,834 before the FOMC meeting, have a retest, come back down, retest it after the news, we pump back up? Or are we going to have a bearish news where we'll just cut our losses over here and drop further down to even 3,500 or 3,680? Because this is an equity market. You can't just drop 10% within 24 hours unless something bearish comes within the market. Those are the two case scenarios. Number one, if it's a 50 basis point, it's neutral. We will see a stagnating price within the stocks. By stagnating price, I'm also meaning BTC. We'll start seeing pump up, a bit of the pump down, sideways, 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 and then boom, we start pumping back up. By pumping back up, we'll now start retesting our EMAs. That's the 50 EMA as the first retest. Okay, our 50 EMA will be the first retest. The second retest will be at the level of 100 EMA, and on 100 EMA, we are talking of the price of 27,682. Then what happens? After we've pumped to 27,682, people will now be bullish saying everything has been absorbed in the market. We are all fine. Let's pump. Then Bitcoin drops immediately, even below 20K, and heads back to 15K to wash away the moon boys and the moon girls that are talking of now 100K. When we're pumping up to 70K, we're having the narrative of Bitcoin is going to 100K, Bitcoin is going to 150K, Bitcoin is going to 200K. Now you're having the narrative of Bitcoin is going to $10,000, Bitcoin is going to 5K, 8K, 15K. We are all hoping for that because right now we are seeing people quietly depressed in the markets. Will that happen within BTC on a short hour time frame or on a long hour time frame? Are you feeling the thrill of capitulation within the market? I'm not feeling the capitulation in the market being filled in yet. Let's check out our USDT dominance and let's check out our Bitcoin dominance. Now, with our Bitcoin dominance, we are now seeing the drop that simply happened from 48.43% back to 45.81%. Now we are seeing a green candle forming within a one-day time frame. That means alt season is still there for the moon boys. Are people still shilling altcoins at this moment? Yes, they are on the interest of buying altcoins. Are we seeing Bitcoin dominance being above 50%? No. Because if we can check within the history, we are seeing high chances of Bitcoin dominance gaining back in the market. Look at, for example, in 20, let me bring out a chart on the weekly time frame on the Bitcoin dominance chart, and you are going to have a talk within 2018, 2019, and 2020. In 2020, we had a drop of the Bitcoin dominance at 58%. Few people were investing altcoins at that time in 2020 after the COVID crash. What happened? The Bitcoin dominance pumped quite well back to 72.85%. As you can see, we've also had a bit of some correction within our Bitcoin dominance. Over here, are we experiencing the same thing that we are seeing right now in the markets? Like this? Yeah, it seems to be the same correction. Same thing we also had over here when we had that bear market in 2018, 2017, 2018, we had a bit low of the Bitcoin dominance. We saw it rising up, retest again, okay, at a level of 33 point. It pumped back again, retested back down, retested it, bull season, and then finally we came back to 68.56%. So this started happening on early July after the idea of alt season came out of people's mind. And at what rate was that? That was a 52.84% Bitcoin dominance. Let's look out at the USDT dominance. But before I leave that, are we seeing Bitcoin dominance testing the 50 EMA? Yes, it already passed the 50 EMA, and now it almost retested the 100 EMA, got rejected down. Now it's trying to test the 50 EMA within the 1 week time frame of Bitcoin's dominance. We are now heading over to the USDT dominance. Where are people heading over to, ladies and gentlemen? There it is. Ah, nice. Nice, 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 nice. USDT dominance. People are running away from for their lives. Okay. During this bear market, we've seen a parabolic pump in the USDT dominance from 3.65% up to 8.647%. That's a 2x. The Bitcoin dominance is rising. People are in fear. Okay. But during the alt season on Bitcoin dominance, what are we seeing? Oh, it's alt season. Bitcoin is pumping from 4.81% back to 2%. Now, people are in fear and saying, oh, God, Lord, I'm just going to stable coins. I'm going to USDC and USDT. Then, beginning of 2022, people started moving sideways to the USDT, dropped back down when you had that relief pump to 48K. And now we pumped on the upside back to 8.67%. And now we're at a rate of 8.15%. That means fear has simply loomed on people's faces. If you compare the COVID crash on 2020 with the Bitcoin dominance at 1.64%, we pumped back immediately with that fear up to 4%. That was around 3x, came back down, pumped up again up to 5.045%, then came back down at it. And that's the same thing we are seeing. Are we seeing a high rise in the Bitcoin dominance on the weekly time frame? Yes. Our relative strength index is at 93.03. Our stochastics RSI is also quite high at 99.39. People are in fear. And I'm expecting a bit of some relief over here. We might have a capitulation after the basis points rates come out within 3 hours and 30 minutes. And then after that, kind of relief, then we simply plunge down in the market. So people are in fear right now. If anything happens positively, altcoins will even pump on a level of 40 to 60% within 24 hours after that relief pump. Now, let's check out our USDT dominance within the 1 hour time frame. Where are people heading over to? Oh, people ran away. Now the Bitcoin dominance stopped to 8.44%. People have started investing on altcoins. That was on 15th. That was of today. Again, the Bitcoin dominance is pumping up again. These are people that just booked some profits. Maybe when Bitcoin was at 20K, it pumped to 21,224, and now they're back at it. Okay, they're back at it. What's happened also to the 2-year yield bond after the ECB meeting? The 2-year yield bond started crashing down. Let's look at the 2-year yield bond back in 2018. What happened back in 2018 within the 2-year yield bonds, and this happened to the rest of the yield bonds. The yield bonds peaked at 2.98%, and that's when the Fed started their QT, and that's the quantitative tightening. They also imploded a 50 basis point to a 25 basis point. Then what happened? It crashed from 2.984% bit by bit. It's not happening drastically as you think. If you're having the idea and or the narrative that the bonds will crash immediately and then finally we'll have a Bitcoin rally and we're going to 150K, 200K, altcoins will do a 60x, 100x, a 2x for me, you're dreaming. Why are you dreaming? Anything that goes up must come down, but not coming down drastically. It comes down with time. Time is of variance. It came down. How long did it take for it to have a major crash or a major impact in the markets? The yield bond dumped 53% within 483 days. This was after 2018. So beginning of 2019 to 2020, the yield bond started crashing, and then during the COVID crash, it crashed even more. That does not tell us that we need to see the yield bond crashing now, and then we can say, Fuchs, you know, it's crashing. It has just crashed 20%. We are now okay. It doesn't take that much of a time. Like if it's crashing now, you're expecting it to within 1 month crash 20%. No, it dumps drastically. Remember, we started having a relief pump of Bitcoin beginning of end of 2019, 2018. You can see what was happening to the yield bonds. It started dropping from 2.913%. So the Fed were doing their things by laying off some of their mortgages that they've been having and their equities. So it started dropping from 2.913% slowly by slowly. By the end of 2020, it had dropped to 53.23%. So they had controlled the bonds. Then we had one major crash on the bonds. Have we seen the bonds picking up yet, having a peak? Yes, it has peaked quite beautifully, but we had our rates at 96 within the 1 day time frame, and also in the 1 week time frame within the 2 year yield bond. We saw a relative strength index of 96 is dropped, and now we are seeing a reference index of 86. So the drop has begun. How long will this last? Is this just a bit of some relief and then we'll see a pump in the market? It doesn't mean that when the Fed imposed the Fed rates into the market as of now, things will move on healthy as it should. Maybe on 2 months, within 2 months to 3 months. You need to study the market. You need to see data coming out saying the CPI data says that inflation in June was at 8.6%. In July is at 8.4%, or maybe at 7.9%. In August is at 7.4%. In April is at 6.4%, and in November it's at 4.3%. That's a healthy retracement within inflation, and that means inflation picked up at June. But what if you're seeing 8.6%, the next month you're seeing 9.4%, then the next one 11%? Inflation is not being tamed. So inflation, if inflation is not being tamed, which tools are they using aggressively within the market? Then you're talking of the idea of Bitcoin now crashing immediately to even the zones of $8,000 or even $5,000. It doesn't matter any technical analysis within the markets. So right now, you're asking me another question that you would like to ask me: should I get onto any trade within 3 hours and 30 minutes? Because I'm seeing green and I feel like buying some altcoins to scoop some profits. I will simply tell you no. We are having the volatility right now. It's fine. But if you look even at the SP 500 within shorter time frames like the 30 minutes, we are seeing low volatility within the markets. So as we are nearing the 3 hours and 30 minutes time, the low volatility will start appearing in the market as people anticipate and wait. What are you going to say about taming inflation? As you can see within the 30-minute time frame, we are seeing a bearish correction happening. Let me delete this. Within the 30-minute time frame, we are seeing a bearish correction happening within the market. Can we have back up to a rate of 3,722? You normally know you have to wait within 1 hour to 2 hours to be able to know where the stocks stand. If you're thinking that the stocks is now green and you now start investing in it, then you are wrecked. So always understand fundamentals and technical analysis before getting onto any trade in the markets. After the 3 hours and 30 minutes, after we've had the Fed, now we'll be able to make our moves and say, okay, that seemed bearish. Where are we heading to? I'm shorting the market. Let me short it on a small leverage or a high leverage, book my profits. I'm paying myself. But what if it's bullish? Then we start pumping back up. But are we expecting any bullish news with the Fed as of today? No. And that's why you're seeing Bitcoin is stagnating on price. It's moving between 20,000 and 21K. 20,000 and 21K. We'll have to see what happens at within 3 hours and 30 minutes. We've already seen what has been happening across the board. There's a lot of FUD in the markets. And before I leave, I have to talk about one token that if you have invested on it or you're trading on it, be very careful. We are having Waves token that simply has its USDN token. USDN token. Waves. What happens? Will it happen like Luna? Because remember, it's already lost its peg again. Now we're seeing the USDN at from 0.98 to 0.94. It dropped to 0.91 within 24 hours. Why are you investing on USDN? Number one. Number two, why are you in Waves currently? Because this is a stable coin for Waves. Remember, UST crashed. They were buying more Wave, they were buying more Luna, they were buying more BTC, so that to peg the UST on a $1 ratio. Now, the same thing, you're having issue with Waves, they're not able to simply stagnate the price of the USDN on a $1 ratio. What happens if they're not able to peg on a $1 ratio? Waves token will crash, USDN will crash just like Luna. And then that's when you start hearing someone saying, I longed Waves, it wrecked me. The government needs to regulate the market. You did not understand the fundamental analysis of what is happening on Waves token. Be very careful if you're trading any altcoin as of now. You can see the kind of rag that it simply took down. It pumped up to $64 from $8. Why did it pump? Because they were launching their USDN token, their algorithmic stable coin. They were pumping more BTC, they were pumping more Waves. They were buying day by day, day by day. But you have that crash coming down because immediately after they've bought, now the price started plunging from $64 back to now $4.4 in price. Same thing that happened to Luna. You need to be careful if you're trading Waves as of today. I've already mentioned it out. Be very careful. Either you're going long or short on it. You might get wrecked within less than 24 hours because some might be trading with their life savings at this point. Same thing that's also happened at TRX. You have heard that Justin Sun is now withdrawing Tron. Why? Why is he withdrawing Tron? And that's why you've seen a major crash on Tron immediately. It came back down to a price of 0.004660. He's now withdrawing Tron. Okay, is it difficult for him to peg the USDN on a $1 ratio? Is he tired of it? Is it not working? Why is he withdrawing Tron before? That's the same thing that Justin Sun did before the collapse of the UST. Be very careful. If you're trading Tron and you're trading Waves, be careful in the market. They have algorithmic coins that has never been tested by it be pegging $1 ratio. It's never stood out, and a collapse might happen immediately, or a pump might happen immediately within these coins. Okay, that's my narrative on these two altcoins. That's what I've talked about, and I've also talked about the market. So be careful within the 3 hours, 30 minutes. If you've traded and you're in profits, take your profits, pay yourself, come out of the trade. There's always another day to fight. The market is always there. It's not going anywhere. It doesn't have to mean it has been closed. The crypto market never closes. So be careful and watch out on whatever is about to come within 3 hours, 30 minutes. I'll be doing a session at that time. Be able to see what the Fed have had to say about the market. And now we can get onto those juicy trades on the Bitcoin and Ethereum trade. With Ethereum, a bit of some FUD that was there within Ethereum. It had an immense drop back to it had an immense drop back to 1014. Okay, 1014. So maybe the first 50 EM with the weekly time frame, it might have a retest to 1606, 2317, and 2705. But that's just on the exponential moving average. But if we're able to see our relative strength index bearish trend line, we've seen an immense drop in the markets. Okay, we've seen that huge immense drop in the market on Ethereum back to maybe on a 913.85. Right now we're seeing it's at 12. If it's able to break this, am I seeing a retest back to this range, getting back lower, or I'm seeing a breakout where I'll be changing my trend line back to a bullish trend? Okay, back to a bullish trend. Is this a fake bear trap? It doesn't seem so. But it's a nice point for myself to be able to buy some Ethereum and Bitcoin over here. If the Fed news is quite bullish, I'll buy immediately, book in some profits within some few days, some few hours, come off the market. Okay. So ladies and gentlemen, be careful out there today. Expect a bit of some volatility as the Fed will be making their statements. And I'll wish you peace. Bye bye.